All right, welcome to another episode of Real Talk Podcast. Today I have Mark Updegraff from Rochester, New York. He is a broker out there and has been taking down all types of large deals for years. I'm super excited to hear his story. I don't know the whole thing yet. So, Mark, thank you for being here. Thanks for coming on my show. I'm so happy to have you here. And without further ado, I'd like you to just introduce yourself a little bit and tell us, how did you get started in real estate?
Hey Trevor, thanks so much for having me on the show. I started like a lot of people do. I just bought a house. So my parents thought I was nuts. My girlfriend, wife now, thought I was nuts. All my friends said, dude, what are you doing? It's kind of a sketchy spot to be buying a house. You know, you're going to lose your butt. But I decided to move forward with it anyway. It was $55,000. And back in those days, you know, with Bank of America, we could get 90-10 financing. So I had to have 10% down. They knew I wasn't going to be living in it. At least I think they did. And I was still able to get a pretty large concession. So I closed that deal with about $7,000 out of pocket, which was awesome. I rented it out for $925. Yes, that's a pretty good cash flow. And within the first couple of lease cycles, I got it all the way up to 1125 in rents. And after I got that first unit, I fixed it up a little bit myself. Did some interior painting, nothing crazy. Put a couple cabinets in the kitchen, refinished the hardwood floors, and I was pretty bored after I got it leased. I was like, now what? I'm not getting any calls from the tenants because I fixed it and there's nothing wrong with it. And I wanted more properties. So I just kind of went down that path of, that was my benchmark. And then I just wanted to try to beat my benchmark. And I was kind of getting used to, different locations and how different locations perform. Because in my market, everything is very nuanced, street to street, block to block. So my second purchase, I kind of went into a little bit riskier of an area and that, set that flag. And then I quickly started to pivot back towards the original purchase, a little less risky. I kept them all within a pretty tight geographical area, though. We're not talking like not even a mile apart from each other, probably a half mile. But it's just that nuance from street to street and block to block. So I just continued to plant flags and build benchmarks and then use those to track performance and then just always try to improve on the performance. So that's how I got started in real estate.
That's interesting. So it sounds like I didn't expect that answer. I thought that you maybe started with sales. So you started just with investing in real estate and then you just ended up also, because I know you have a brokerage out there, right? And I don't know if you have agents working underneath you or anything, but what got you into then, doing sales as well?
Sure. So I graduated from RIT with an undergrad degree. I went into industry and I wasn't happy with how much I was making. So I went back, I got an advanced degree, and then I went into the workforce. I worked there for about a year and a half before I got laid off. And they had lost this legacy contract with the Department of Defense. So there were about 2,000 people with similar backgrounds as me in Rochester, all imaging people looking for work at the same time. At that point in my career, I already had probably a dozen rentals. And, I talked to my wife and said, we could move to DC or Herndon and I could get a job like I have now, but I'll make the same money and our cost of living will probably be, 50% higher, maybe double. And, it'd be less comfortable to live. Rochester's a pretty economically viable place to live and grow a family. She loves her career where she's at, and she really didn't want to move. So I had this stupid idea at the time. I was like, why don't I just try sales? She's like, what? And I'm like, I know. I have this disdain for salespeople, and I have no sales training, and I don't know anything about sales. But I had purchased a few houses, and I'd gone through the process, and it didn't seem like it was that hard. And I told her, look, I'll get the license. It's not that expensive. And if I'm not any good at it, then we can figure something else out. So she's like, all right, I'll give you a shot. You can go ahead and try that approach. So I got my license. I hung it with my college landlord. He was a broker. And I remember going into his office and talking to him. And, he was like, you really want to be on somebody's team. They're going to teach you all the ropes, and you're going to be able to really grow your business by being on somebody's team. I was like, oh, well, what does it cost to be on their team? He's like, oh, they just take half your commission. It's like, bro, I can't afford to give up half my commission, man. I gotta grow my business. I'm trying to start a family. I'm just going to politely decline the offer, and I'm going to go out and I'm going to just try to figure this out on my own. And, he wished me well. And I remember leaving his office and just telling him, yeah, I'm going to go out and get those pre-qualifications now. Like, I'm on it. And then I get to the parking lot and I'm like, wait a minute, I'm not from Rochester. I don't really have any family members that live in this area, and I'm pretty young. So like, where am I going to get these pre-qualifications? I have no clue, but I was pretty determined to try anyway. My wife gave me a couple referrals early on from people that she worked with that were younger first-time home buyers, and I walked them through the process to get my first couple of sales under my belt. And the feedback I got from them was pretty good. They said it was great working with you. I had a pretty good construction background at that point, having taken, probably 4 or 5 pretty dilapidated properties and putting them back together. Gave me a lot of experience on the cost of renovations and what to look out for when you're buying a house. I did one inspection on a property, the first property that we bought, and since then I've just inspected them myself, and I've written non-contingent offers without inspections. I just feel like I don't need them personally. There's nothing that an inspector is going to see that I'm not going to see. So I'd walk them through kind of like an inspector would, and back then they could still get inspections and everything. It wasn't like a crazy market like it is today. But getting that feedback was good. It allowed me to invest in myself. So at the time I was still running the construction crew. I was still, doing my own real estate investing, and I was managing the units. So those are all pretty active components of what I had going on. But I saw the potential in the sales side as far as earning, and I wanted to be able to earn more so I could invest more. So that was my sole focus. And I started and took out ad space on Zillow and Realtor, and I used sites like BiggerPockets. And I just tracked my ROI real carefully. So I would invest a certain amount of money, and I would track the leads that were coming in, and I would try to figure out, because some of them wouldn't monetize immediately. I've had leads that have taken years to monetize. But if you know that you've got a good relationship and you're pretty certain that it will monetize, you can try to track your ROI. It's a little difficult. But I did that, and then my sales shot through the roof. My first year I did like 1.5, which isn't great. Second year, I was up to like 3.5. Third year, I was honing in on 6. And then by my fourth year in the business, I was getting close to 10 million. And people in the space were like, dude, what are you doing? You're not from Rochester. You have no real estate background. And all of a sudden you're a peak producer. And I just told them it's not that hard. It's a relationship game. You've got to be willing to answer the phone when it rings, and then do whatever your client needs done to get something under contract. So as long as you're willing to put in the work, you're going to make some money in sales. So I had done that. I had trained a few people on the management side to free up my time, and they'd worked for me for a couple of years. They were probably 5 years younger than me, but they still looked up to me, and they like wanted to kind of emulate what I was doing. And they said, look, you're crushing it in sales. Why don't you train us, be salespeople? So when I started the brokerage, my broker at the time, I told him it was just for management, not for sales. He didn't really care. He just kicked me out. He's like, you're on your own now. So I started 2 brokerages. I started one for management, one for the sales side. And then my first 2 property managers decided they wanted to get into sales. So I trained them with kind of my methodology, and brought them up into peak producing agents. And we built out both the brokerage for sales and the brokerage for management at the same time. And a lot of our clients that came in were investors. So I would train them on how to work with investors. And then when they got them through the sales process, we'd put them over into the management department, and we would manage for them. So we've just been building those relationships over the last 15 years with a lot of investors that are trusting us with their capital to find a good asset, get it under management, and then operate it for them.
That is, man, that's incredible. It sounds like you obviously just knew what you were doing in real estate, and that added a lot of value to your clients just from personal experience, and brought you into working with investors a lot. With those, and I'm assuming that you got a lot of kind of just natural referrals from people, just word of mouth, and people just hearing what you were doing. And it's like, if you want to buy an investment property, go see Mark. It sounds like, kind of an underlying, reading between the lines there, but it also sounds like what you really did to just grow your sales business is you were doing paid leads and just following up.
Yeah.
Right.
Yeah, paid leads, but when I would get to the end of the year and I'd look at my sales, honestly, I made more money off of sites like Bigger Pockets. And the reason being is it's a community. And when I first started out, I didn't know anything about real estate. So I went into that community. I asked a lot of questions. I got to know a lot of people that were really established and knew what the heck they were doing. And I fostered those relationships. And then when I was ready and I felt like I had some experience, and even when I was still, young and learning, if I learned something that I thought could add value to the community, I would put it back out there. So even as early as like my first investment properties, I was like, okay, this is what I learned about painting, about cutting, about, prepping windows that have lead paint. So I would take any of that information that I kind of learned the hard way, and I would put that out as maybe a blog post or an article, or I'd go into the forums and I would answer questions. So at the end of the year of every sales year, when I'm looking back at my closed sales, Bigger Pockets would always just crush. And, they do have a paid subscription that you can participate in, but honestly, I have never really had to do that. I've just gotten natural people coming to me saying, hey, I see that you're in the Rochester market. I like the content that you put out on Bigger Pockets, and, I want to touch bases about investing in Rochester. And then from there, I could, take the lead, and then I could divvy it out to my team, or I can handle it myself, depending.
Wow. Okay. So that's like, you can consider that organic, right? You weren't paying for it. Did you ultimately let go of the, Zillow and Realtor, or you keep those leads flowing in too to this day?
So the business model for those sites, I think, have changed a lot, with the iBuy programs, and just lost tons and tons of money. The ROI has just fallen off a cliff lately, especially over the last like 1 to 2 years. I always will have somewhat of a Zillow presence, but I track my ROI pretty carefully. And, you can think of it more as just brand recognition than actual, ROI on your leads. It's not like you're going to make $0, but sometimes it feels like, you're paying them money just to get the same money back. So I don't want to work for free. I don't want to work for Zillow. So I would tell you, in today's marketplace, if you've got a big team that you're trying to feed and you're buying leads in bulk, like massive bulk, they will prioritize you. They'll give you discounts. And I think they give you the better leads. They're also going to a model where if you're willing to give them like 30% of your commission, then they'll give you the leads. So whenever a company tells me that that's going to be their new model, I can read the writing between the lines. Anybody that signs up for that's like, yeah, I'll give you 30% of my commission. If they know that you're a closer, they're going to give you the better leads, because their ROI is going to be higher raking that 30% than paying for the straight lead, most likely. So I think as they continue to grow their businesses, it's going to more shift into that model where instead of, the broker or the agent paying a flat fee and then receiving a certain, amount of impressions or leads, now it's going to be, we're just going to give you the leads. And if you're a good closer, we'll give you more because you're making us more money. So I really think that's the future of online leads as far as those platforms are concerned. I don't love it. I think it really, it's making agents be a slave to those companies. And ultimately, it's our data. So I think we should be able to figure out a way to kind of take back power from those sites and maybe not have to rely on them so heavily. So I do have a small investment, but it's nothing like it used to be.
Sure. Wow, that's a really good explanation of the landscape in Zillow leads. I've actually had a very similar experience back when I was lending a lot, and noticed the same trend you're seeing, is like the ROI just fell off a cliff. Especially when rates went up too. It was a big shift. But how are you? Have you experienced, kind of like after years of taking in those leads from various places, to where your kind of referral business just starts to naturally become dominant just because of all these paid leads that you've helped out before?
Yeah, that's totally true. So not being from Rochester, I was kind of forced into that paid lead cycle to build a base, to build a book of business where now I can sit back a little bit and have some stuff coming in organically as referrals or as Pat and Pete business. So that's been huge. And a lot of people, now being in the business for almost 15 years, people are starting to sell. A lot of investors, I think, that we've positioned really well over the last 15 years have nice portfolios. And, my advice to them when they eventually reach out and say, hey, we're ready to start reevaluating what we're doing, will be to kind of parlay that into a bigger investment, larger multifamily or maybe some self-storage or industrial.
I love it. I love it. Yes, that is awesome. So let me ask you, what's your, I mean, you've been investing yourself this whole time. You've been helping investors. It sounds like you're now introducing syndication opportunities for your investors. So if I'm getting this right, like kind of your way out of having to rely on sales all the time to eat is real estate investment. So I'd love to hear a bit more about that, what you've been doing yourself in investing in real estate and what you're doing next.
Yeah. So I try to let all of the real estate stuff kind of sit on its own, right? Everything's compartmentalized in separate LLCs, including all the various businesses that I'm running. So I really don't want to tap into that. I want that to feed itself and just keep itself growing. So the model that I've been using since before it became popularized, like the Burr method, was kind of, it's pretty much it, but just on a little bit longer of a time scale. So I follow the first time home buyer trend pretty carefully and price per foot. And what happens in a heated market is that first time home buyer, the FHA buyer, he doesn't have a huge deposit. He probably wants an inspection. He's just a tough buyer to get into a house. The competitive markets, they'll never get into them, right? And when they come to me, that's where they want to be. And, they quickly learn that there's no way they're getting into that market. So they've got to figure out what's the next best place to go. And wherever that tends to shift to is a good place to start buying. And you're going to have a pretty good ramp up over the 3 to 5 year horizon because, they get into that marketplace. They tell their friends start buying in that marketplace. Other people will start opening businesses because they know that now we've got an influx of a pretty decent income. So now we can open a coffee shop here. We can open some bars. We can open some other stuff. That area, it has a cycle. It becomes the next heated area because now all of a sudden it's trendy. It's got the newest bar. It's got the newest stuff. And the cycle repeats itself. And so now put the first time home buyer in there 5 years from now, I can't put a first time home buyer in there because now it's conventional or cash are ruling all the sales. And now that first time home buyer has to go to another market. So I constantly buy in that market that they're going into. And then I do my cash out refi 3 to 5 years later. I buy at such a price that when I do the refi, I can recapture all of my equity. So I'm getting 100% of my investment back out. And then I can just roll that ball over again. So I've got a pretty nice value add ball that I can roll. And as I've built my business, I can deploy it in other ways strategically and make that a little bit quicker of a time frame. Maybe I'll do some foreclosure investing, and those I'll just buy with cash now that I've got the cash nut that I can use. And then I'll do a refi in the 6 months or the 1 year, whatever the lender's requiring. So that's been my model. That's what I've taught other people. And I think if you have that horizon where you're not trying to get rich quick, but you're trying to accelerate yourself on somewhat of a better scale, and your goal is to pull your cash back out while yet still being able to cash flow and not shooting yourself into negative territory, it's a good model. And it's not going to happen overnight, but if you continue to follow that path for a couple decades, you're going to have a really nice portfolio when you're going into your retirement years.
The most predictable way to get rich is with real estate, I think, and it just takes time. That's it. Like you're saying, man, I love it. I'm curious how you're finding, if you don't mind revealing, the next spot. I mean, that makes perfect sense, right? Like, where's the next spot that first time home buyers are going to go to? How are you identifying that?
It's typically price per foot, because they're going to be the most sensitive to that. In that, their pre-quals are less than most established conventional buyers that might be buying a second house or that might have like a really good job. So they're not going to be able to just go to a more expensive price per foot area. So if I'm looking at, the prime market, the A class where everybody wants to be, let's just say that's trading at 150 a foot, they're probably going to end up buying around 100 a foot. I'd like to see it as low as possible as an investor, because if I can get it at like 80 a foot, I'm going to have even more cash flow. But I would tell you in my marketplace, they're probably buying in the like 100 to 120 a foot. And then we're going to see a ramp up towards that 150 a foot within 3 to 5 years. And then that 150 a foot, tends to become closer to 200 a foot. So I try to segregate the price per foot into like tiers, class A, class B, and then follow those metrics. And part of the secret is just being able to go into your MSA and like break it up into chunks and figure out why you're breaking it up into chunks. So like the river in Rochester runs directly through the city. It sets apart the east and the west easily. So we can say, okay, and then just breaking it down further. So maybe you use the border as one edge, and then you use an arterial street as another edge, and you use maybe a park as another edge. So you can build these little segments, and then you can analyze them in segments to see how they're looking from a price per foot basis, from a gross rent multiplier basis. And then once you see that on a map, you can say, oh, okay, I see that, this little track has a really good gross rent multiplier where I'd want to invest. And it's right next to an excellent area that, class A and everybody loves. So like, why wouldn't I buy in that really good area, knowing that the people that want to be in the good area can't afford it, they're going to come right next door. They're just, once you see it on a map, it's easy to understand where people are going to go, because, if they're surrounded by niceness, parks and Riverway and other class A real estate, then yeah, that's probably going to convert. But if they're like way off in, the edge of the market and they're surrounded by class D, that's probably never going to improve, right? Or it'll improve decades from now, right? So just being able to break it up and to see why things work the way they do. And I would tell you that the blocks that I break up are pretty small. It comes down to maybe 10 square blocks, I would say, are my little breakups.
Solid gold, Mark. Really like gold nuggets to do what you've been doing. And I knew you were a brilliant guy when I first talked to you. And thank you for bringing your brilliance, your years of experience. I know that you just spent the last 2 decades falling on your face to figure all this stuff out, man. So like, thank you so much for dropping all this incredible knowledge. Like super appreciate it. The last thing I want to hear before we close out is, what are you doing next? All right. I just heard a ton about what you've been doing for the last couple of decades and the systems that you've put together. Awesome. What are you what's the next move? What are you doing after this?
Yeah, so just like you, I'm getting into the capital raising space. I think that's the window of opportunity in these smaller multifamilies, unless you're going to do short-term rentals like you're doing, has pretty much closed, right? So somebody like me that's doing term leases, looking at the interest rates, looking at the purchase prices, I don't really like it. It's not very attractive. I can get one-offs here and there. I can go to the foreclosure and I can pick up, but that's more blind squirrel finding a nut than something that's scalable. So I'm looking to get into larger asset class where I can get some interest only finance and I can get back to that cash flow model, and then I can do some good value add plays. I think, my experience in the construction side and like really figuring out what the numbers are, not only on, roofing and windows and all that stuff, but then all the little things that come in on the management side. That has been the hardest thing to dial in over the last 15 years, are systems and procedures with management, and then understanding what the true operational cost of managing a property is. That's going to change depending on the property. And a lot of people, when they do their pro formas, that's all it is. It's pro forma. Somebody told them to put something into it, put 10% in, put 5% in, whatever. The reality is it's not that simple. And the only way that you can understand exactly how your asset's going to perform is by having experience operating similar assets. So all my years of doing this and really understanding the difference between running a deferred property, trying to bring it up into the marketplace to be a better quality, but still fighting against some of those problems as far as being in a bad area where, maybe your neighbor's selling crack or something like that, all the way over to the nuances of operating in a class A. I've done everything from both sides of the spectrum. So I think that using that skill set is going to be really valuable for entering into, you know, the next phase of my career.
Absolutely. I have no doubt at this point that people that are interested in investing in real estate but have not done it professionally or don't quite have the time to do it because they have, let's say, a high paying W-2 job or something of that nature, handing that money over to a professional that's going to charge you fees and take a cut of the profits is still going to yield you not just a higher return on your investment because it's with a skilled operator that just knows how to look around corners better than you and find return opportunities. It's also going to give you an incredible return on your time because now you don't got to worry about it because you like managing real estate is incredibly time consuming and complex. I think a lot of people don't realize that. So I'm super, super excited for you, Mark, and to see how that plays out. For those, you know, for the investors that you've been helping for years, I'm sure they're going to line up to work with you. But for those that are maybe just hearing about you for the first time, what's the name of your brokerage? How do they get in touch with you?
Yep. So on the capital raising side, I've got Raise Capital. It's RAZE capital.com. So we stack up all these blocks of cash and then we just knock them down, turn them into real assets.
Raisecapital.com. That's cool, man. I love that. Like a razor almost. Awesome. Well, Mark, man, again, thank you. Thank you so much for being here and giving me all this incredible knowledge that I got some notes here that I gotta look into some stuff that you mentioned, man. So really appreciate it. Wish you nothing but the best of success. I'm sure you're going to enjoy it and just seeing what you do over the next coming years.
Awesome. Thank you so much.